you are in SAVE Forbearance, interest has started accumulating August 1st. Please watch this video. If you don't, your interest may be accumulating, and there's so many questions I'm seeing asked to us on Reddit about what if you do nothing. So let's dive in. A lot of our borrowers that we work with are trying to buy a house. If you do nothing and let your interest accumulate, what is your impact on home buying? So let's break that down. First, I'm going to talk about the number of borrowers that are now 90-day late. New data came out from Q1 and Q2 from the Fed. Additionally, we're going to talk about what SAVE borrowers should do and then the impact on mortgage. Okay, that's the structure of this video. So skip to the sections that you find relevant. First and foremost, 91% of you viewing this video are not subscribers or regular video viewers of our channel. So please like or subscribe if you find this helpful. So let's talk right away. I made an error in my One Big Beautiful Bill summary. I made a couple errors actually. It's because I was actively summarizing every version of the bill, and what ended up getting passed, I might have misspoken on a few points, and that video ironically blew up with all these comments about how I made an error in my speech. So let me go over that as well, and then I'm going to dive into the video. If you are a public servant, this is very relevant to you, okay? So first of all, to get your payments on SAVE Forbearance counted for PSLF, you have to do what's called PSLF buyback. It's funny because we were telling our clients this. I'm not quite sure if I misspoke or that I'm saying that it can count because I'm thinking that people can do PSLF buyback. But here's the thing about PSLF buyback. You can only do it when you come towards 120 payments. That's not legislated by Congress, so buyback may not exist in 5 years from now if you're in the middle of your payments. So it's an option for those that are, I would say, closer towards the end of their payment because we don't know what's going to happen to PSLF buyback, okay? The second item I talked about was whether contract employees, if they've expanded the definition and if contract employees can qualify for PSLF. Here's the thing. Even though it didn't end up getting expanded, LoanSense has helped many contract employees qualify for PSLF by getting the main employer to certify the public service loan forgiveness forms. Of course, it's been a huge focus in the state of California and Texas because a lot of healthcare workers are forced to be contract employees. Also, mental health care professionals especially. We've had a great success rate of certifying those employees specifically, even though they were contract employees. So regardless of the bill, we have helped borrowers enroll their public service loan forgiveness paperwork using the main employer, main nonprofit's EIN, and they have found someone in HR who would sign it, and therefore they got that time counted, okay? So those are my few corrections. There's someone going on my comments trying to correct everything. I commend you. I invite you to a video to talk if you'd like, because I don't mean to spread misinformation. Sometimes when you're producing a lot of content all the time, you do misspeak, especially when you're reading many iterations of a bill. Now let's dive in to the summary topics I wanted to talk about in this video. First of all, the Fed reported that 10.2% of all student loan borrowers, if you do the math, that is over 8 million people, are 90 days late on their student loans. That is impacting their credit scores. It's impacting their ability to buy a home, to purchase a car, because you have to get credit for that, right? So I wanted to talk about that data point. If you did not receive notice from your servicer about your repayments, your payment starting, or you receive multiple conflicting notices, we can help request the removal of that 90 days late, not with the credit providers, but with your servicer directly. If you're interested in that, please comment dispute below. We can give you some resources on how we can help you on that. Comment dispute, I'm gonna personally reply. Please don't expect me to reply within a day because that's not likely to happen, but I will try to reply. If you want some dispute resources, happy to give that out. So now let's talk about SAVE interest accumulating and what what that means. And people are asking us questions as well as all over Reddit. What does that mean I should do? Well, number one, if you had 0% interest and now August 1 interest is accumulating, what does that mean? Number one, that means your balance is going up, right? And if you want to calculate exactly how much your balance is going up, take your loan balance times by your interest rate and divide by 365 days. You're going to understand your interest accumulation by the day. For a lot of people, that's $10, $15 a day, right? So we always advise people to get into a plan and repay, especially if you're a public servant. I've gotten lots of questions. Well, what if I can't afford my payment? I didn't do my 2024 taxes because I'm scared my payment's going to go up. Well, let me tell you, you can fill out the IDR paperwork and use historical income. That's what we help people do. Don't connect your don't connect to the IRS tool in StudentAid.gov. Just use older tax returns. It's worked. We've helped people do that. If you have questions about how we do that, we just manually file. We do what we call e-filing. We skip StudentAid.gov, file straight with the servicer, manually with the proof of income we want to submit. Let us know if we can help you with that. We have literally saved people from their payments spiking by 2 to 3 times with this method. Please do not go into StudentAid.gov and connect your IRS tax returns, because then it will always be using your most recent income, and that may not always be advantageous to you, right? Because it might be easier, but it might not be advantageous for your payment. So I want to give that pro tip. Second of all, if you stay in forbearance, eventually the government, when we phase out SAVE, the government will basically put you, there'll be a choice. You'll go into income-based repayment, or past 2026, the bill is creating what's called repayment assistance, okay? That's a new plan. I don't recommend people necessarily go into repayment assistance, especially if they're towards the end of their payment, because repayment assistance is a 30-year plan, okay? Versus income-based repayment is 20 to 25 years, depending if you go into new versus old IBR, income-based repayment. So what is the risk of inaction? Let's talk about that. Obviously, continued accumulation of interest, right? That's number one. Number two is just spending time languishing with a ballooning balance without actively making a plan on what to do with your loans. If you know, for example, you're going to be between jobs in the next 3 months and you're okay in the next 2 to 3 months and you're okay with that accumulating interest, you can enroll into pay-as-you-earn or income-based repayment with a $0 income, because between jobs you have a $0 income, right? That's a great strategy we recommend as well. But just make sure whatever it is, you stay up to date with your student loan servicer, because it would be very tragic for you to enter into any type of whatever it is. If you're on SAVE Forbearance, that's fine, but there's a lot of people who have their payments started and they didn't know. Whatever it is, just check with your servicer and you understand exactly what status your student loans are in, because we don't want more people to go into delinquency. Now let me explain how this impacts, last part of my video, home buying. So let's say you graduated with $80,000 in debt, you haven't had to pay because of COVID, you've been put on this pause and no interest is accumulated, and now interest starts accumulating. So let's say you haven't made a payment, you borrowed $85,000, let's say it's $87,000 with origination fees, and now interest is gonna accumulate at, I didn't calculate the amount per day for this exercise, but let's just say there's, for the sake of this exercise, $300 a month accumulating, right? So now let's say you want to buy a house in the next 6 months and you do nothing. $300 in 6 months is $1,800. That's going to be added to your balance plus those origination fees. And now the lender will look at your balance and say, because you're not in repayment, we're going to take a portion of that balance to be your student loan payment. And if they use a conventional product, they're going to use 1%. So 1% depends, conventional, Freddie or Fannie, of course, but if they use Fannie, it's going to be 1%. And so your payment's going to be, $900, something around there, depending what the exact figure adds up to, but 1% of, let's say, around $90,000, that's $900. And let's say you go into repayment in IBR, and based on your income, you can get into a plan that's $300. That difference in $900 to $300, that difference in $600 could literally mean you afford less home. So you afford $600 per month less home. Okay, so that can be around 50 to 60,000, depending on the interest rate, what you qualify for, your credit, etc., and how much you put down, right? But the point is it could have quite a big impact depending on what your payment is relative to what the deferment and growing balance percentage is, okay? So I wanted to explain that a little. So what is an action plan? An action plan is to consider what the best plan is to get out of SAVE, especially if you're trying to buy a home or if you're a public servant. Understanding what the interest accumulation is per day often I find really helps people not want to stay in a program with accumulating interest, especially since it's quite high. The interest rates right now are quite high. And understanding your options, what to enroll in, what's the best plan. And then lastly, just keeping a paper trail of everything you do with your student loan servicer, because there's a lot of mess ups. There's a lot of, you submit something in StudentAid.gov, there's no paper trail, you have no idea what's happened, confirming everything's been submitted. Those are some pro tips. If you go into repayment, set up auto pay. So my call to action to you is to not just be like, assume the status of your student loans is like, I'm good, I don't have to pay until XYZ. Just check on it, and check on it like once every month or two, even if you're not paying. It's really important to understand the status of your loan standing, and also, auto debit and all that. A lot of people, why so many are in delinquency is because they thought, oh, well, I put my payment in auto debit before the pandemic, so when payments start, it should already auto debit. That's absolutely not true. They canceled auto debit for every single borrower. So check into that. If we can help you at all, strategize how to lower your payment, prevent payment spiking. If we can help you decide what repayment plan, if you're a parent with Parent Plus loans, enrolling into income contingency repayment right now is super critical to being able to get access to an income-driven plan. As of next year, I recommend people really consider that. Otherwise, in the new bill, parents do not have access to repayment assistance anymore. And so that's another big pro tip. I should probably make a video just on that. Again, comment credit dispute if you want some resources. Comment SAVE if you'd like additional information, or if we can send you a link to schedule an appointment with us.